Thank you all very much for joining us. I'm really delighted to extend a welcome today to Lord David Sainsbury, as well as to welcome both John Coatsworth and Miguel Urquiola, who will participate in the program a bit later. Of course, as you all know, John is provost of the university and previously was a great dean of SIPA from 2007 to 2012, and Miguel is our vice dean of SIPA, an associate professor of international affairs and economics. Let me briefly introduce Lord Sainsbury. Lord Sainsbury previously studied history and psychology at King's College, Cambridge, and then received his MBA from Columbia's Graduate School of Business. He served as finance director of a great family business, J. Sainsbury plc, from 73 to 90, deputy chairman from 88 to 92, and chairman from 92 to 98. He was appointed Minister of Science and Innovation from July 98 and served until November 2006. That is a remarkably long time. It's really an extraordinary period of service. And in this role, he had responsibility for the Office of Science and Technology, Innovation, Space, the Bioscience and Chemical Industries, and the Patent Office. In 2011, he was elected Chancellor of the University of Cambridge. He's the founder of the Gatsby Charitable Foundation, and in 2003, on behalf of the family, the Andrew Carnegie Medal for Philanthropy. We are here to celebrate his new book and to hear him speak about it. But prior to this book, he is the author of two important works, pamphlets, Government and Industry, A New Partnership, and Science and Innovation Policies in a Global Economy. He also co-authored with Christopher Smallwood, Wealth Creation and Jobs, which was published by the Public Policy Center. And in 2007, he produced an important review of the government's science and innovation policies, which was called The Race to the Top, a concept I think that he further develops in this book. Today we're talking about progressive capitalism. I think, as I've read the book and enjoyed it immensely, the cornerstone of progressive capitalism is a belief in capitalism. It also incorporates a recognition of the crucial role of institutions, the need for the state to be involved in the design of institutions, and the use of social justice as an important measure of a country's economic performance. Progressive capitalism shows how this progressive political economy can be used by politicians and policymakers. I'd say another feature of progressive capitalism that I particularly appreciate is what he calls this race to the top, namely the importance of innovation and the role of national systems in creating innovation and an environment conducive to it. So with that, let me just note with appreciation the great friend that Lord Sainsbury is of Columbia and of SIPA, and to thank him for all that he's done for us and to welcome him today. Thank you very much for joining us.
Thank you very much for those kind remarks. I'm delighted to be here this evening for a number of reasons. First of all, I think many of the political economic challenges that we face in the UK and in the USA are very similar. The UK and the USA were, of course, the original champions of the neoliberal view of capitalism, which has dominated, I think, political economy for the last 35 years. And I think, therefore, we both face the challenge of constructing a new political economy now that the neoliberal view is seen to have major flaws. Secondly, one of my aims in writing Progressive Capitalism was to put firms and entrepreneurs back at the center of the discussions about economic growth. I believe that one of the failures of neoliberal economic thinking has really been to take firms and the acquisition of organizational and technological capabilities out of the theory of economic growth. But if you look at, of course, economic growth across the world, this is one of the key issues. And it was, of course, here at Columbia, getting my MBA degree, that I first began thinking about how how firms build up competitive advantage and create wealth. It was an enormously stimulating and interesting period of my life, and I owe a great debt of gratitude, I think, to Columbia for what I learned here. And thirdly, in writing Progressive Capitalism, I was enormously encouraged and helped by John Coatsworth while I was writing it. He gave me enormously valuable support over the long period it took me to write the book, and also put me in touch with a number of colleagues, such as Miguel, who gave me a great deal of help and is totally responsible for all the errors in the book. So I owe a great gratitude to SEPA. When I left government, actually there's a fourth reason why I'm delighted actually to be here, and that is, of course, because in a way America is the home of progressive capitalism. As you know, there was a very strong progressive movement in America between 1900 and 1920, and it was out of that with people like Teddy Roosevelt and Louis Brandeis, the lawyer, who were very fundamental, played a very big role in some of the fundamental social legislation in America, such as, for example, workers' compensation, which came out of that period. And of course, Louis Brandeis wrote a book, which I would love to have written, called Other People's Money, What the Bankers Use It For, which I think still has a certain amount of resonance today. So for all those reasons, I'm delighted to be here this evening. When I left the Labour government in 2006, having been a minister of science and innovation for 8 years, I believed, I think like everyone else, that the economy was doing well and that the Labour government was doing a good job managing it. I think one has to ask, therefore, why do we hold this view, and why were we so blind to the massive problems building up in the economy? The answer is, I think, that we all had, with varying degrees of enthusiasm, bought into the neoliberal political economy, which had dominated the thinking of politicians and economists for the last 35 years, and we all therefore believed, in varying degrees of enthusiasm, that markets are self-correcting and self-regulating, and the governments only have a very limited, minimal role to play in the economy. But after I left government, I fairly quickly came to the conclusion that the model of capitalism to which we had all adhered had very serious flaws and badly needed to be reformed. Now, obviously, the main event which led me to hold that view was the financial crash of 2008, which seemed to me was clearly caused not only by an enormous borrowing binge and massive housing bubble across a large part of the Western world, but also by four major institutional failures. Those failures were the uncontrolled growth of subprime mortgages and their securitization, the high level of debt taken on by the banks, the lack of transparency of bank balance sheets. You will understand the use of the word lack of transparency of bank balance sheets means that effectively they were deeply misleading, if not actually fraudulent, and the use of special purpose vehicles and the uncontrolled use of derivatives. Now, all of those were institutional failures which should never have been allowed to happen. And on the basis of the financial policy I was taught across the road, should never have been allowed to take place. I could also see in the UK two other major institutional failures which needed to be corrected. The first of these was in the UK equity markets and the returns to shareholders. The annual inflation-adjusted return on UK pension funds between 2000 and 2009, and this is, remember, is a period when 40% of all corporate profits in the UK were going to the financial sector. The returns to the pension funds over that period was 1.1% in real terms. Over the previous 40 years, it had run somewhere between 4 and 5%, which is the sort of rate it should be. For that critical 10-year period, it was 1.1% in real terms. Now, of course, you can argue, if you want to defend the investment management community at that point, there are good decades for investment and there are bad decades. You have to remember, though, this was the period when the investment managers were making the huge sums of money, paying huge bonuses, and, as I say, taking 40% of all corporate profits. And you have to ask whether that is the way the financial markets should operate. Secondly, of course, in the field of corporate governance in the UK investment managers were failing to exercise their rights as shareholders, with the result that the nature and level of incentives for corporate executives were being distorted by a deeply flawed version of the financial market-based compensation, which led in turn to an extremely damaging financial incentive bubble which is unsustainable. This was, of course, the theory of shareholder value, and that if you could link the bonuses of executives to the shareholder value, i.e. The combination of returns of dividends and share price, in that way you could motivate business executives to really look after the shareholder interests. And of course, in theory, that is an enormously attractive idea, but it was done very badly, and as a result could be very easily manipulated, and actually gave huge bonuses to executives, which were largely unrelated to the performance of their companies. As well as these major failures of the financial system, I think my time in government also taught me that more work needed to be done to correct the institutional flaws in the country's national system of innovation and its education and training system. And that's therefore why I decided to write a book on progressive capitalism, which would set out a new progressive political economy which recognized that institutions are important and that the state has to design them because they involve conflicting interests, or in the case of national system of innovation or the education and training system, public goods, which have to be largely funded by the state. The state, therefore, has to be involved with them, and the state has to be the body which corrects these institutional failures. Having said that, let me say that an absolutely key point that has to be made in this discussion is that capitalism is progressive capitalism is very firmly based on a belief in capitalism, which I think can be distinguished by two features. It's actually one of the curious facts of this whole discussion in this area that people spend all their time talking about capitalism, the origins of capitalism, the varieties of capitalism, how capitalism can be reformed, and then you say to them, what exactly is it that you mean by capitalism? And people start mumbling about, well, it's a sort of kind of market economy sort of argument. I think there are two very clear features which distinguish a capitalist system from either feudalism, which is where we started before we had a capitalist system, or a planned economy. And those two features are, first of all, that it's an economic system where most of the assets are privately owned. And we believe that because we think that if they're privately owned, the private owners will make certain that they're used to best effect. And the second feature is that production is guided and income is distributed largely through the operation of markets. Those are the two features of what a capitalist system is all about. And as you'll see, all the suggestions I make in progressive capitalism are about making that system work as it is actually supposed to work. So it's not trying to move it to a planned economy, it's trying to make the capitalist system work as it's supposed to work. But as well as there's that basic belief in capitalism, progressive capitalism also incorporates three defining beliefs of progressive thinking. And you'll find all these strands of progressive thinking in that progressive movement in America between 1900 and 1920. They are the crucial role of institutions, the need for the state to be involved in the design of institutions in order to resolve conflicting interests and provide public goods, and the use of social justice, defined as fairness, as an important measure of a country's economic performance. I think a major mistake of neoclassical economists is not to see that capitalism is in fact a socio-economic system. It's not just about economic forces, it's about the institutions that a society has in controlling those economic forces. And it's a mistake because if you look at all the empirical studies of economic growth, both in historical terms and today in the countries that are growing fast, you'll find that four institutions are of critical importance in determining the growth rate of companies. These four institutions are the institutions which underpin financial and labor markets, the institutions which underpin the governance of firms, a country's education and training system, and its national system of innovation. That is the network of institutions in the public and private sectors whose activities and interventions initiate, import, modify, and diffuse new technologies. For example, just to take an example of this, if you look at the performance of companies, whether, for example, they go in for long-term investment or very short-term investment, whether they train their workforce or not, you will see that this is very much affected by the relationship that they have with shareholders. If that's a good relationship, they will operate in one way. If they have the right kind of governance, they will operate in one way. If they don't, then they will operate in another way. So the governance and the relationship with shareholders is immensely important as to whether they take a long-term view of success or not. And in fact, I think you have to say that in the UK, that governance system is not working well, partly, as I've said, because of the payments to executives got out of control, which has to be a sign that all is not well, and also because we see firms taking a very short-term viewpoint. The second defining belief of progressive thinking is that the state has to be involved in the design of those institutions and the reform of them. Unlike what most neoclassical economists think, institutions do not spontaneously evolve. They have to be designed, and the state has to be involved because in the case of institutions which underpin labor and financial markets and corporate government, it has to resolve conflicting interests of participants. And in the case of a country's education and training system, its national system of innovation, it has to be involved in the funding of those institutions. One of my last things I did as a minister in the government was to take a bill through the House of Lords, which was the Company Bill of 2006. As of course my luck would have it, this was the longest bill ever to go through Parliament. A normal bill is about 70 clauses. This was started as 800 clauses, and we then consolidated some more legislation, and it ended up in 1,400 clauses, every one of which has to be debated clause by clause in the House of Lords. We debated it for I think 72 hours in total by the end. That taught me quite a bit about company law. What it taught me above all is, of course, company law is about resolving conflicts, not, as most people think, between employers and employees, but between investors and company management. And there is this vast body of law which is to regulate that relationship, because, of course, people will not invest in companies unless they know that those institutions actually have a system of corporate governance, which will mean that the executives use the money for what it's supposed to and not for their own interests, and also that they'll get accounts of their company's activities which give a true and fair view of what the company has done. And that vast body of law is required to make that system work properly. Having said all that, let me then stress one other very key point about this whole debate, which is that the role that I'm talking about for the state is essentially an enabling role, or market supporting one. It's not the command and control role of traditional socialists or the minimalist role of neoliberals. Progressive capitalism is not about looking back in England, as we would say, to clause 4 socialism, i.e. about state ownership, or neoliberalism. It is about this role, enabling role for the state. The third defining belief of progressive thinking is that social justice needs to be used as an important measure of a country's economic performance. If you talk to neoliberals, they will always assess an economy's performance in terms of economic growth and freedom. But I think if you're concerned with the well-being of society, which is what most of us are interested in, it's not possible to argue that a wealthy society, where a great deal of the wealth goes to the top 1%, is better than a society which is slightly less wealthy, but has a fair distribution of wealth. And I think implicitly, therefore, one has to look at social justice and fairness as part of one's assessment of economies. And that in this country, and also in a slightly less degree in the UK, is a really important issue. Because one of the most, I think, extraordinary facts which comes out of looking at this area is if you take the period 1979 to 2005 in America, and you look at the extra money that has gone to the top 1%, 0.1% of people, that's about 300,000 people in the United States. That sum of money was 50% larger than the money which went to the bottom 60%, which was 180 million people. So just think about that. The money which went to the top 300,000 people was 50% bigger than the amount which went to the bottom 60%, which was 180 million people. I find it very difficult to see that as being a society which is maximizing the well-being of its citizens. And I should say the UK figures are slightly better, but not a great deal. And this fact distinguishes the Anglo-Saxon kind of capitalism from many of the other European countries. I also believe, and this is really, I think, a point which is more a UK point than an American point, that one has to talk about fairness as a measure of social justice rather than equality. In Europe, too often, because of our socialist traditions, we talk about the aim being equality. I think it should be social justice and fairness for at least 3 reasons. First of all, it's very difficult to devise practical and effective policies to achieve equality in market economy. Secondly, there is a real trade-off between equality and economic growth. It's almost impossible to have really good growth rates if equality, in terms of equality outcome, is what you're aiming for. And of course, the final point is actually equality is not something which practically anyone in our society aspires to. If you talk to trade unions, as I've done in occasions throughout my life, they never talk about equality other than equality between men and women. What they talk about is differentials. The debate is always, if the people on the factory floor get X then we maintenance engineers get X plus 20%. And why is that? Well, because that's fair. That's what the differentials are. So equality is not a very good measure, not least of all because very few people actually aspire to it. I think that the importance of this view of progressive capitalism is, of course, that it gives you help as a policymaker to looking at particular issues. One of the extraordinary things in England is that industrial policy, which used to be something that you couldn't talk about in public, was forbidden. Suddenly it's now back on the agenda. We have the government talking about industrial policy, the TUC, our trade union body, talking about industrial policy, and indeed the CBI, which is the body which looks after the interests of our big companies, also talking about industrial policy. As always with industrial policy, it is not totally clear what people mean by this, and the fact that those three very different bodies all want to have an industrial policy almost certainly means that they're talking about different things. I think if you have this view of industrial policy, then you can begin to go through this debate and decide really what it is and what is desirable. Because if it's about making certain that the training and education in the society is what you need, if it means about getting a good innovation system, if it's about making financial markets work as they should, then that is all to be applauded. If, on the other hand, it's about politicians and civil servants getting involved in product decisions or backing one company against another, it's to be avoided like the plague, and one should not go down that route. I think by talking about progressive capitalism and the role of the state, it's possible to find one way through that debate. So I hope these brief remarks help you to understand the political economy of progressive capitalism. I hope you've taken on board the point that all the suggestions I make in the book are designed to make capitalism today work as it's supposed to work. As I said at the beginning, a key feature of capitalism is that the productive assets of an economy are held by individuals on the basis they're best placed to make certain that they're used productively. That's not what's happening today when we have what can best be called ownerless capitalism. Secondly, the role of financial markets is to consolidate people's savings and invest them where they will bring the best returns for investors, and to do so at the lowest transaction costs. But again, that's not what's happening today, and in both cases we need major economic reforms. In a few cases, steps have been taken in both the USA and the UK to make capitalism work as it should do, but I believe we have a long way to go. As I said at the beginning of this talk, the challenge that we face in the UK and the USA in terms of a political economy, I believe is very similar. Equally, I believe the answer is much the same. We need to firmly reject the neoliberalism which has dominated politics and economics for the last 35 years and adopt something like the progressive capitalism that I've outlined in this talk. And in this way, we should be able to achieve what Keynes regarded as the three objectives of economic policy, which are economic growth, liberty, and social justice. Thank you very much.
So we're going to have a brief discussion with our guest, and then open the floor to questions and answers. The book you've seen has a number of lines going across the bottom. The ones on the bottom are the neoliberal economies, and the one that's red that goes up is the progressive capitalism that David talks about. I read several versions of this book. It got better each time I read it. I think it provides considerable insight both into what's gone wrong in recent years and what in the past has seemed to work better. So I'm delighted to have Miguel here, who's also taken an interest in the book. So we'll start with some comments from him. I'll add a little bit to what I have to say. David then will have an opportunity to defend himself if he wishes.
Right.
And there'll be questions and answers from the audience.
Thanks very much, John. It's been a pleasure, really, to, as John mentioned, read several drafts of the book, and it's extremely interesting, and I've learned a lot because it basically goes through a lot of topics. I rather than make a comment, I actually want to ask a question, and it may not be the easiest question to answer, but I think it's also related to the fact that since I started reading with this book, Lord Sainsbury has become the Chancellor of Cambridge University, and so I think that the book is very interesting, and it basically says one of the things that a capitalist economy or that a country that has a market system should worry about is institutional design. And I very much agree with that, of course. Now, when I look at universities around the world, and of course we are sitting in one, and there are so many designs, and they are rather different. And I know that this is not something that you tackle directly in the book, but if you have any thoughts, now that you've looked, for example, at some cases here, since you studied here, or the design of Cambridge, or the design of any sort of university system in the continent, for example, what is it that you think might serve, what type of design or what type of intervention might better serve, to basically generate this type of progressive capitalism?
We need all the help we can get.
This is something that...
Well, that's kind of like Japanese industrial policy. That's a kind of favorite kind of subject. So why don't I talk about it? Of course, like many things, we in the UK have followed what actually we saw happening in the best American universities. I think there is a very interesting bit of history here about the role of universities in society, which of course over the years has changed, and I don't think people have always realized how much it's changed. If you go back, of course as Chancellor of Cambridge you can say this, if you go back to medieval times, of course what universities were for was the conservation of knowledge and teaching. And actually I think people don't realize that it's only really in the middle of the 19th century in Germany that the idea that research was something that universities did became a prevalent view. And in fact, of course, originally, at the start of that, British universities were appalled by this. They said, this will distract from our primary role, which is teaching. Of course, now the universities would say, of course, teaching is, that research, of course, is the fundamental issue for universities. And in time, I think it's true also in America, that both the UK and America followed the German example of putting research as very much the center of universities, so that you find a lot of British academics and American academics going to Germany to learn about research. And then I think the next step is of course, back in America, where MIT, just before the Second World War, began to think in terms of knowledge transfer. And that was remarkable. People at that university suddenly said, we really need to think about knowledge transfer. And the reason for that, interestingly, was they saw in the New England area a decline of industry, mainly going to the south of America. The shoe industry, cheap textiles was going to the south of America. They felt something needed to be done, and that university knowledge could be used for that, linking with the venture capital industry to support new industries. It took a long time for that message to come across to the UK, and it was only really about 15 years ago that message became something that universities took on, and has now become, I think, beginning to be a very central feature of what universities are about. That it has three roles. It's about teaching, it's about research, and it's about knowledge transfer. And I think the important lesson there is actually that it's about basic research. It's not about applied research. One of the things I found most difficult as a minister, if you could get the Chancellor of Exchequer to really focus on the issue of innovation, then the second problem always was, well, that means we must do more applied research. And of course, that is 100% wrong. If you look at British universities, the most knowledge transfer comes out of the universities which have the highest academic record, which of course would be no surprise in America, because if you look at America, the universities which have had most impact on local economies, you'd probably say was MIT, Stanford, Berkeley, Austin, Texas. All of these are in fact world-class research universities. The British Treasury always thinks MIT is an applied research university, but that tells you simply how far removed from reality the British Treasury is. So I think this model of basic research plus knowledge, incentives for knowledge transfer is the model, and it seems to me, as always in many of these things, America leads the world on that. We're trying to catch up, but you've got a rather big head start.
Thanks, David. Microphone still on? Can you hear me? All right.
Yeah.
Yes. So, this is a book that is written with deceptive lucidity. It's eminently readable. It's written very clearly, and it's a joy to read. If you compare it to some of the other tomes, which we inflict on our students and on ourselves from time to time. It has a wonderful chapter on why growth rates differ among countries, that has a case study of Japan and of Finland, two cases that we don't think about so much here. It has a very insightful chapter on varieties of capitalism that compares the more liberal, if you will, UK and USA to some of the continental systems, and helps to explain why, in some cases, efforts to transfer institutions from one to the other doesn't really work very well. It has, my favorite chapter is the chapter on knowledge and innovation, because as a minister, Lord Sainsbury had considerable experience on the pitfalls as well as the successes that are involved. And the chapter that I found the most encouraging was an optimistic chapter on the developing world. This is a part of the world in which governments tend to be too small. When they do work, they tend to be less efficient than they should, where there are infrastructure deficits, massive backwardness in the capacity to train and to educate populations. And suddenly I was reading a chapter which gave me some hope, based in part, David, on your experience in Africa and elsewhere. So if you could say something about why the rest of us should be hopeful about the developing world, and what your advice is on in those cases, that would be interesting.
I think if you look at what actually has gone on in Africa, but also I think if you look at what happened in our own countries when they were developing, you can actually get some very useful ideas rather than looking at the neoclassical economic literature. I think it's one of the failures of economics is that they divided the world into economics for developed countries and economics for developing countries. The most useful information comes, of course, if you look at currently developed countries and look at how they grew, whether it's Japan or Taiwan or South Korea, or, most interestingly, our own countries, USA and America. To illustrate what I mean is, one of the things, my charitable trust does mainly work in East Africa, and it's largely, but not completely, in the field of agriculture. One of the things, if you go there, you will be told, is that agricultural extension services don't work in Africa. And then if you get in the hands of the neoclassical economists at the World Bank, they will say in any case they're not needed, because if the farmers actually need this know-how, they will pay for it. So you don't really need to have agricultural extension services. Of course, if you look back at either the UK or the USA, and you ask how did we increase our agricultural productivity, it was through agricultural extension services. I think it was in England was the first use of agricultural extension services, and then, of course, America. It was built. The whole thing was built on land universities with research in them, and then using farmers with experience to go out and talk to other farmers and raise their productivity. We've done a bit of that in places like Tanzania on the cotton industry. There's no question that's the sensible way to do it. And it's, of course, nonsense to go around saying that you don't need agricultural extension services. I mean, it's if you want an example of where development economics, as practiced, as used to be practiced, I think, by the World Bank and the IMF, this is the most obvious example of really counterproductive views. In a country, I mean, Tanzania is an example of this. The World Bank came along and said, you've got to cut your deficit. They then didn't in any way interfere in the process of cutting the deficit. The first thing was agricultural extension services, easiest thing to cut politically. And then 5 years later, the World Bank comes and says, where is your poverty reduction program? Now, the Tanzanians said, oh, well, we better have a poverty reduction program. What they should have said is, the best poverty reduction program is agricultural extension services, because that's where your poorest people are, and the best way to raise their standard of living is getting agricultural productivity up. And it shows you how misguided economic development had become in these countries, that exactly the wrong message was being given them by the kind of World Bank kind of institutions. So I think we can learn a lot from our own histories as developing countries, as well as from places like Japan, Taiwan, and so on. If you look at what they did, almost all cases, there was quite a heavy presence of the government in that, but not actually directing companies, but actually creating the conditions in which companies could grow and prosper, and above all, learn technology from the Western world.
Thank you. The floor is open for questions. There's some people with microphones, so if you raise your hand, one will appear under your nose. Very quick, there's a question here in the front. And when you ask a question, would you just identify yourself?
Okay, my name is Fernando Sotelino, a professor here, adjunct professor, international banking and finance. And my question is, first a simple question, then some background, and please. The question is, if you believe in progressive capitalism, what would be your view on the speed with which we can reach it? And the background is that I remember a paper I read from a very good British economist, I think it was John Rawls, in 1973, talking about social justice. And I remember that he somewhat focused on the political process and suggested that for that to be achieved, we would need a political process where people writing the laws could think for all and not for themselves. In other words, if I don't know if my grandchild will be born poor and in some place or modest, I may vote differently regarding minimum conditions, education, health insurance, or what have you. While that may be true, we see political systems developing where money is of the essence for elections, and important, if not minorities, important blocs that can influence important decisions are elected, actually thinking very narrowly, or just for themselves or for a small contingent, rather thinking for all. So as we look at this dichotomy, are you an optimist towards the implementation of the good ideas here presented, or you say it's nice to consider them, but let's all be patient, and we'll take a while.
Okay. Well, I think I'd direct you to the last pages of Keynes's General Theory. And in that, he makes two famous, well, he makes one very famous remark, which is about the powerfulness of ideas versus vested interests. And says in the end, he thinks ideas will win out, are more powerful than vested interests. So very optimistic. And then he has a slightly less optimistic view, which is practically never quoted, in which he says, which is relevant perhaps to you and I, which is very rarely do people change their political views or think about these issues after the age of 35. And therefore, you have to wait, you have to expect to wait for the young people to get to the top of the political system before you can get change. So I spend a lot of time going around talking to young audiences in the hope that 20 years later, when I'm long dead, they will tackle these issues. There is an element of this, that people do form their views when they're young. And these things will only change dramatically when a new generation takes office. For sure, in a lot of African countries, there is various degrees of corruption, but also, I think, degrees of incompetence. People simply do not have the skills and knowledge. You can do something quite a lot about the second. The first, I think you have to wait till there's a generation come through who take over the political process and say, this is not acceptable, and we will organize our society better.
Over here.
My name is Ryan Kendall. I'm a student at GS, which is one of the schools for people who are about 35 who are rethinking their views on life. So Columbia's a little different.
I usually find this argument goes down well, depending on the youth of the audience. Yeah.
I have a pretty simple question. Well, maybe not that simple. You talked about continental systems in Europe, which are probably more akin to social democracies, probably rate higher in terms of fairness on your scale of social justice, compared to majoritarian systems like the UK and the United States. And I was wondering to what degree you think electoral rules play a role in determining the type of capitalism that the country practices. In continental Europe, for instance, most of the governments are elected with some type of proportional representation system. In the UK and the United States, that's simply not the case. And we see great differentials between the levels of inequality. So I'm wondering if you think there's a structural issue here that needs to be addressed in terms of electoral rules.
I think there are issues like this, but going back to what John Coatsworth drew attention to, I think there are issues which are not really about the voting system, political system, but the ways that you organize your society. In particular, the relationship between trade associations and trade unions in societies. It's very difficult. For example, well, go back to John's question. Whenever there's a financial crisis, countries look around the world and they look at which country is doing well, and they say, let's borrow from that country. And if you follow this for a number of years, as I have, this is a very repetitious kind of process. So, for example, in the 1980s, we all thought Japan had really solved this issue. I remember going off to Japan and looking at what was happening, coming back convinced that we should try and copy what the Japanese did. And you'll find in America there was a similar thing. People thought, how can we borrow from the Japanese system? Then, of course, interestingly, in about 1990, the Japanese industry collapses. And we then have 10 years, and at this point the American economy seems to be doing rather better. So we then go through 10 years, which the Japanese agonize over how they can become more like the American economy. What is common to both periods is they achieved absolutely nothing of use because the social structures and institutions are so completely different. The same applies if you look at training. For 100 years, I think, and this is slightly the same in America, we've been incredibly bad at training the technician level of people. For 100 years, every 10 years in UK, we write a report about how bad technical education is and how we must be more like the Germans. But there is no way we can replicate the German system because it's run by the trade unions and the trade association who have very strong controls over their members. They run the technician training system. There's no way either America or we could ever copy that. And you can find lots of other examples. I mean, the other one, of course, is Japan. Japan solved the problem of technical education, which is about how do you stop people poaching people who've been trained by other companies. Of course, the Japanese did this because they had lifetime employment, so it wasn't an issue. Young Japanese joined a company and stayed for life. And I remember thinking in the 1980s, this is a brilliant system. We ought to try and do this. But of course, there's no way you can copy that in our countries. And then, of course, you discover it works brilliantly while you're developing very fast. When you get to the point where some of your industries become uncompetitive because there's cheaper products coming in from China, the system becomes very bad because there's no social welfare system. And you therefore hang on to industries and employ people long after they should be allowed to break up and people become redundant. So I think you've got to be, it's very difficult to copy, and you need to understand what your social institutions of the countries are. I think that's more important than whether you have a proportional system or a majority system. Though that does have an effect in some of these issues.
I think the question here was partly about the influence of vested interests in political life. And I guess these two questions are sort of come together on that issue. I think we have an even more complicated system in the United States than Britain does. I think I'm right, someone will correct me, I hope, that given that you need 60 votes to pass a bill or even to discuss it or to close discussion in the United States Senate, you can get 40 votes from states that represent something like 12% of the U.S. population. So we have something that's quite the opposite of proportional representation. And there is some frustration in the U.S. at the bad institutional design, if you will, when it comes to passing coherent programs of legislation, which is something, whatever may be the British system, if there's a majority government does have at least that opportunity.
Right.
Other questions? Yes.
I enjoyed your presentation very, very much. My name is Reverend Rob Rollins, fellow alumni of the business school, and you indicated that social justice, a measurement of social justice is fairness, okay? And one of the components for capitalism is money in the hands of private hands. Aside from the moral reasons for social justice, how is fairness and social justice in the best interest of the shareholders, in your opinion?
Well, I think the definition of fairness in this context is really about whether the returns people get relate to their contribution to economic life, isn't it? I don't know what the situation is in America, but I think it's the same as UK, which is actually if people mortgage their house, put the money into small business, grow that business, take risks, produce good products, train their workers, give people good jobs. Actually, people are very relaxed about those people making a lot of money. What they don't think is fair or just is when bankers take huge bonuses from making a lot of money. Actually, that doesn't in itself worry them. But when those banks then collapse, are bailed out by the government, and the bankers re-emerge, again with huge bonuses, now called retention bonuses, and go on making lots of money. Certainly in the UK, people say that's not fair. Clearly it's not related to their contribution they're making to society. My sense is that view is now pretty prevalent in America as well. And people have a quite clear sense of, is that fair? Is it related to the contribution they make? And of course, shareholders, I think, have a similar cause of complaint in many ways. I think if you look at the dividend policies of lots of these organizations, it's not at all clear that the investors and shareholders did well out of these companies. In fact, they did very badly in many cases. And I think there's an issue of fairness there.
David, one of the things that's quite interesting about this book is its discussion of the financial collapse and the reforms that seem necessary. And I have the impression, we were talking about this earlier, that financial reform, once Dodd-Frank was passed here and some things were done in Britain, seemed to go off the agenda for a while. People got distracted and preoccupied with the other aspects of the consequences of the financial crisis. But I have the impression, and I think you do as well, that this is a debate that seems to be reviving again. We've had a number of prosecutions of major banks, huge fines being paid by a number of them. The SCE now has the SEC now has a quite vigorous leadership. Is it you have the same impression that this is a debate that's opening up again?
I think it is. So, simply because people see one group after another of banks being hauled up in front of the courts, clearly having done things which are close to being fraudulent, and people say there is something going seriously wrong here. I think the other thing, of course, happened, which was where the politicians were in a very difficult situation, which is you're trying to save the banks from going under. It's then very difficult to be involved in prosecuting the heads of those banks at the same moment you're trying to save them, because they are the people who actually have the knowledge of how you run the bank. And, you know, putting a huge fine of billions of pounds on a bank which you're trying to rescue is not very helpful. I think the worst of that is through, and I think it's possible for people to kind of look at these things with less of a view, well, we've just got to save the bank and stop the financial system going under. And I think it's surfacing. I think also, of course, the impression I've had in the last few days is opinion in America now is very much soured, because people's living standards are under huge pressure, and people are very fed up about this. And I think there's a good deal of anger out there about what has happened, isn't it? Whereas, of course, the immediate effect was not quite so dramatic in terms of people's standard of living. And now people see it in their standard of living and are angry about it.
Final question? One more.
Yes, Irene Fennell-Honigman. I teach European banks and markets and also international banking. The model you presented for progressive capitalism seems to have worked very well in some of the Nordic countries, certainly in Finland, in other countries where both R&D and basic principles of capitalism have been brought together. Is it possible that this model needs smaller, more homogeneous societies in which it can flourish? Or is it possible that it can flourish in much more diverse, in a sense, much more unbalanced in a way, and unfair inherently and culturally, historically, you could call unfair societies? How does one use this model and apply it? And certainly in the European crisis, we have now seen in many ways the problems that countries that seem to be following that have inherently done better, starting from Germany, the bloc around, and the Nordic countries. And yet at the same time, there seems to be a desperate need to find somewhat new models in the countries that are suffering the most. So do you think that this model is possible, and can it be carried over in societies that do not have the advantages of a country like Finland?
I certainly think that smallness it's always seen to have disadvantages. I think if you look at a lot of countries, you find smallness has some real advantages. And one of the real advantages is the ability of the leadership to actually decide things among themselves and move quite quickly. So I think if you look at Finland or even Ireland in recent years, they have the advantage that if there's a crisis, you can get the 12 people into a pub or a sauna and sort it out among yourselves quite easily. The bigger the society gets, the more difficult it is for the leadership just to get together and sort it. And in a crisis, that's quite a useful thing to have, isn't it? But I think more importantly is stages of development. I mean, Finland had the great advantage, it came rather late to this. And it then had some pieces of luck. There's no question the government did very well in this whole agenda of research and high tech. But that was partly because it came kind of quite late to the situation when you could see what was happening.
David, thank you very much for a great discussion and a wonderful book.
Thank you very much.
Thank you very much indeed. Let me invite you all to a small reception, and also there's a wonderful book out there you might want to buy.